Hey everyone, it's Christian. We'll get started with the meetup in probably about 2 or 3 minutes here.
Hi, Christian.
Hey Vince, how are you?
Good. I'm doing great today. How are you?
Great. Get started here in about a minute or so.
Yeah, take your time. I'm ready. I'm on the phone.
Perfect. So why don't we get started? So today's meetup is going to be about multifamily investments and especially real estate investing using a syndication. I'm excited because we have a fantastic guest with us today, Vincent Renda. He's an attorney at law here in San Diego and an owner and investor. He owns the Pinnacle Legal Group, and his contact information is there. I'll also be recording this meetup, so you guys don't need to take notes or anything. I'll make the video available to everybody on YouTube after it's done. Just wanted to take probably about 15 minutes or so to go through the objectives of multifamily real estate investing, and then let Mr. Renda answer any questions you might have or any legal advice that you might need about real estate investing, on what he's been up to and how you can benefit from the current explosion in real estate prices that's happening throughout the world right now.
Yeah, thanks, Christian. I appreciate being here. It's definitely a topic that's near and dear to my heart, both real estate and law. So I'd love to kind of go through it together and then open it up for questions as well, if I can be a resource. Just a tiny bit of background. I've been a practicing lawyer for 20 years, and I focused my practice a lot on real estate law in general, real estate litigation, done a lot of bankruptcy work as well, and real estate syndication. So look forward to chatting with you all today.
Great. So Vince, why don't you discuss a little bit about what you put together as far as the investments that you've done over the last couple of years here, some of the syndications and what the returns have been, and the documents and legal portion of it as it pertains to real estate investing, especially when it comes to the multifamily space.
Sure. So, what kind of brought me into real estate syndication and diversify my law practice a little bit was something where I'm an Air Force JAG on a reserve basis, and I was in Little Rock, Arkansas for a year, all of 2017. And when I was there, I looked a lot at the real estate market because I was very familiar with Southern California, but not the Midwest or the South. And I was just really intrigued by the returns. I mean, they don't have the high appreciation like we do in Southern California during the good times of the real estate cycles, but they definitely have high cap rates. And so it was very interesting. So I got involved in both investing personally and with some others, both in single family residential and also in multifamily, and was able to really secure an 8% cap rate very easily. And it's been great for the investors, and it's been great from the syndication side. The landlord-tenant laws are a little more friendly there as well on the landlord side, so that has helped. And just in general, the market rents are affordable. Little Rock has 750,000 in the MSA, and it's a capital city, so there was plenty of healthcare jobs and government jobs and just other jobs. So it's no place is a perfect place to invest, but it had some appeal, and it didn't have as much competition as other areas of the country as well.
Excellent. Yeah, and I know that you just got back from Little Rock this week and looked at a couple more potential apartment investments. The amount of returns that you're seeing in Arkansas and Texas and other places are obviously a lot higher than they are here in California right now, but there's opportunities all over the place. Is there any risks at all with investing in different states outside of where you're currently residing?
Yeah, definitely. I mean, there are other risks for sure. Texas has been a great economy for quite some time, but every place has their risks. I mean, certain areas that were very oil dependent in Texas, those multifamily places, I think, had more risk because the population of the town was more transient, for example. The value of the properties is just not there like Southern California or Austin, Texas, or Nashville, Tennessee, or places with a lot more hype. So every place has risk, but if you kind of look at the investment and say, what would I have to reduce rents to to still break even on the investment on a monthly basis after paying debt service, property taxes, maintenance. And if that number is something comfortable, then you can usually ride it through the storm and move on to the next cycle.
Excellent. And with mortgage rates as low as they are right now, why don't you explain a little bit about the financing that's available for multifamily investments, especially those that are not that aren't familiar with, what types of mortgages are available and what the differences are a little bit between the ones where you're personally liable and ones where you have no personal liability whatsoever.
Yeah, sure. Well, the mortgage markets and the lending markets are opening up quite a bit. There's actually a lot of good products out there now with various banks, credit unions, and then other, government-backed loans like, Freddie Mae or Freddie Mac and Fannie Mae loans as well, along with HUD loans. Those are a lot harder to get, but the terms are very favorable. And I think like what you were getting at was, most conventional loans, even on investment properties, is what they call recourse financing. So there's a personal guarantee. If the borrowing entity defaults on the obligation, then that personal guarantee can kick in and you can be liable for making that monthly payment. The non-recourse loans are a little more atraditional, and they're usually not offered by local banks or credit unions, but they're offered usually, like I said, the government agency kind of product. So a little bit hard to break into that market, but once you do, it's really a favorable product if you can look into it.
Yeah, definitely. I mean, most people are familiar with a typical real estate mortgage that they take out on their home or investment property, where if something goes sideways or values decline for whatever reason, then they're personally liable for any deficiency there may be at the end of the day. But when it comes to non-recourse loans and Fannie and Freddie financing, especially on commercial properties, a lot of it is non-recourse. So there's no personal liability whatsoever. So if something was to go wrong when it came to the investment, there's the ability to not have that personal liability hanging over you where you need to declare bankruptcy or something like that. You can just pretty much give the property back to the bank and walk away. That's my understanding, at least, right?
Yeah, you're exactly right. Everything you said. I mean, if you are the guarantor on the loan, then obviously all those risks exist. But if it's a non-recourse loan, then obviously those risks don't exist. Or if you're just an investor in the LLC that buys the apartment building, for example, and you're not really the syndicator or the principal, the managing member, say, of the LLC, or whatever the bank is requiring, let's say you own just a small minority piece, you can certainly be an investor, enjoy a 8% preferred return or whatever the investment is spitting out, and still have an ownership interest in the multifamily asset, but not really show up anywhere on paper vis-a-vis liability reasons or for personal guarantees.
Excellent. So I'd like to open it up to questions. So if you guys have any questions at all, feel free to unmute yourself and ask Mr. Renda a question, anything legal about real estate or multifamily investing, or if you want to type it into the chat as well, you can. And I'll start it off with what's probably one of the best investment properties that you've bought or you've seen here, Vince, in the last couple of years that you thought, hey, this is a really great opportunity to own something that's going to be an income producing asset and can also to appreciate in value.
Well, now it's like trying to pick my favorite child. I really like the investments we've done in Arkansas and Texas. I just felt like it was a really good brick and mortar investment, and I remember, if you want me to pick a favorite deal, I remember closing on something in June of 2020. We were just 2-3 months into government shutdowns of COVID really around the country, and there was a lot of nervousness for good reason. And I remember, getting a good discount on a property that was already discounted, closing on this multifamily transaction, and again, taking some risk there. But the bank was willing to underwrite it, and I just had enough confidence that even if it was going to be a storm, that people would still need good housing, and tenants would still need a bed and a kitchen and a bath and place to get ready and everything else. And they it was probably $1 million under market. Again, the timing couldn't have been better, but that's probably one of my favorite ones just because it was kind of at the scariest time, but it just turned out that I think the appreciation was probably the best.
Excellent. Yeah, the times right now with that we're living through with the pandemic and everything else have definitely created a little bit of a challenge, especially for multifamily owners that may or may not be getting paid rent due to circumstances that are beyond their control. But I got a question here from Alex Austin. He wants to know, Vince, how do you go about finding investors and capital for deals that you want to syndicate?
Well, that's a good question. I think the easiest way is to start with your sphere. Start with your circle. Passing the hat or whatever. But a lot of friends and family, and then ask for other introductions to other people that you think are good business people, people that you look up to, people that already invest, and pick their brain and see what they like to invest in, what attracts them to certain investments. Try to ask more questions and have 2 ears for listening and one mouth for talking, and just try to learn a lot, and then ask them what they really, like I said, what they find to be a great investment, who they like to invest with, what are the kind of the criteria and so forth. And then just start broadening your scope. And the more networking you can do, and the more you can get yourself out there with people that will have trust in you, that's a great start.
Yeah, that's definitely true. And what I've always found too is that when you find a great deal, there's no problem raising money or raising capital for it. I think that people like to put the cart before the horse a lot of times, and they say, well, I want to go ask my, friends and family or just investors, quote unquote, for money so that when the right deal comes along, we can purchase it. When really, a lot of the deals that I've done in the past, when I found a property that I wasn't even sure how we would close on it, if it was a great deal, people would come out of the woodwork to invest. They wanted to get a part of it. People can see that there's value. Like you said, if you find a building that's got $1 million worth of unlocked potential in it, and and you can explain it to other people, the raising of funds isn't usually that difficult. There are a lot of great sites out there too. There's Fundrise, and there's Bigger Pockets, and there's all kinds of different crowdsourcing types of platforms that allow you to bring your deals out there and showcase them. But I've always found that the best deals, are easy to get investors or investment from, whereas the ones that may be kind of, marginal, it's going to be difficult to raise value, to raise money on, and therefore it kind of lets you know that, hey, this deal might not be the best, even though you think it's got potential. If other people aren't jumping on board, then it's probably not the best deal to invest in the first place.
Yeah, I agree, Christian. I agree about putting the cart before the horse. And if you're a trustworthy person and you have a good deal that you've really done due diligence on and fleshed it out, sometimes raising the money is not as daunting and as hard as you may think until you just go out and do it.
Definitely. So as far as finding deals goes, Vince, what do you think as far as how do you find the deals that you end up buying?
Well, it's always a variety of sources. Warren Buffett has a great quote. He says, know the markets you do business. And I've always noticed that in my law practice, people that have gotten hurt, they've tried to do business in places they really don't know the market. And I would have never known Little Rock or certain parts of Texas but for my Air Force work. But that was a great opportunity to really get involved in the community. I got in touch with as many commercial bankers as I could. I got in touch with as many commercial realtors as I could. Tried to play golf with them, do lunches, happy hours. This was pre-COVID and things were a little bit more moving and shaking, but things are opening up quite a bit now. So I really think that you can find deals not just on the internet or advertised deals, but you can find deals through property management companies. You can find deals through commercial bankers, commercial brokers, and just other sources in a community if you can really know the area.
Definitely. Yeah. I find that a lot of times too, the best deals are the people that are just getting out of real estate, the ones that have owned a property for 20, 30, 40 years and, don't owe any money on it whatsoever and have basically ridden the appreciation up and now just want to sell it for a fair price and move on. And, those deals typically aren't on the market, but they a lot of times make the most sense, because you have somebody who's, just wants to get out of it and is willing to take a fair price. And as long as you've got a fair price, then, you can get into deals that otherwise aren't necessarily on the market to begin with. It's an incredibly, competitive market right now, as we all know. And the commercial buyers that are out there are looking to snatch up whatever they possibly can as quickly as it comes on the market. So, just when it comes to residential real estate that's flying off the shelves, and we had, appreciation, year-over-year appreciation of 23% just in the residential realm, and the commercial realm is very similar. So the good deals come and go extremely quickly. A lot of times brokers too will keep them in their back pocket. They'll use that pocket listing and go out there and double end the deal, which means they keep the entire commission. So going to a broker isn't necessarily the best way to go, but if you knock on a couple of doors, or there's a complex that you know of that is older and the same people may have owned it for a long time, that usually is a great place to start when it comes to finding deals that may have some upside in them. What else do you guys have? Any questions for Mr. Renda, legal or real estate wise?
You know what they say about free advice? It was worth what they paid for it. So, but if you do have any legal questions, I'm happy to try to field those too. But the real estate, the real estate stuff, you can really be an entrepreneur. You can really have the throttle in your own hands and do great things. So I encourage you, whether you're just a passive investor, or whether you're going to become a syndicator, to take it out there and do it, work hard and make it happen. It's been a very fulfilling part of my career, and it's been great. It's how I've met good guys like Christian Peter and other people in the industry. So it's been nothing but good. And I think this market's going to have quite a tailwind behind it in the multifamily space. So it should be good to go for many.
Definitely. We got another question from Irvin. Thank you so much for that. When starting a syndication, what are some legal do's and don'ts? Example, make everyone sign contracts, receive advice from attorneys. What do you suggest, Vince, when people are starting a syndication? What's the best way to get started?
Well, that's a very good question, and it can be a simple question and it can be a complex question. But I'll tell you, in my opinion, walk before you run. If just for example, these aren't hard and fast numbers, and just for a disclaimer, I'm not an accountant, I'm not a CPA, I'm not a securities lawyer per se, but just for general examples, if you're raising under $1 million of equity, sometimes it's deemed to be somewhat of micro investing. Also, if you have under 35 total investors in the LLC, again, sometimes you can get around some of the tougher regulatory constraints of securities law. Also, another example is if the folks that are investing with you are accredited investors, meaning they have a certain threshold of liquidity and a certain threshold of net worth outside of their primary residence, equity in their primary residence, then they're good to go, and they can invest with you right away. So, I think that if, when in doubt, consult a securities lawyer, consult a CPA and tax professional as well. Anyone that's reputable in the legal industry should at least give one, free consultation, at least on the front end. And, like I said, when in doubt, always concern yourself with the regulation, but try to make it as simple as possible for you. Doesn't need to be some $100 million fund right out of the gate, and you're dealing with, PPMs and Reg D and Securities and Exchange Commission regulation. That's so daunting. So that's my opinion, is try to keep it simple in the beginning, and also try to seek out some professional advice once you have the structure in place that you think you're going to go with, and you think you may need a little more input.
Definitely good advice. Yeah. One thing that you really want to take into account whenever you're doing something that's going to involve somebody else's investment money is that you do get the right legal advice and CPA advice up front, even though it's going to cost probably a couple $1,000s to do so. And you probably don't have a couple $1,000s, or you think you don't right offhand. It's always better to do all of the the dirty work up front and make sure that the disclosures are there and make sure that the numbers are double checked and triple checked by somebody who understands the tax code and everything else before you start taking people's investment and putting it into a syndication or any type of real estate investment per se. I did get another question from China Doll. Thank you so much for that. What's the most that you've made on a real estate deal? What's the highest return? That's a great question. And I think that, Vince kind of went into the one that had probably $1 million worth of equity, buying it. You make money on a lot of these deals on the buy. And one of the ones that's going to close, I think, here in the next couple of days is a great deal that was found in Arkansas. And the bank, the lender, is actually financing not only the purchase price, but also the improvements to the property. So it's actually almost a no money down type of deal, which you don't see very often. When it comes to commercial real estate, where you don't have to come up with any money or very little to close the deal. And there's actually money that's left over to do some of the improvements to the property itself. And the rates are incredible. When you can get a rate that starts with a 3 and it's locked in for 5 years on a 25-year amortization. A lot of these apartments and multifamily investments really start to make sense, and the numbers can get really appealing really quickly, because you can go into an undervalued asset that you're buying for, say, $1 million, put a couple $100,000 into it, increase those rents dramatically, and then your asset value is going to grow up tremendously. So what I mean by that is, if you're buying $1 million apartment building, you put $200,000 of work into it, you've increased your rents on each unit by $200, you might have increased the value of that property to $2 million. So you've actually just got $800,000 of equity by using very little, if any, of your own money and using most of the bank's money. So, it's a great tool to get into, real estate investing when it comes to that type of a product. Again, these are products that are on the market now because the real estate market is so incredibly hot that I think that lenders are able to provide products like that when the values are going up dramatically. So I always recommend that you get in touch with a lender too, and you figure out what is available and what is out there. I know that Vince has had a lot of experience talking to the Fannie Mae's and Freddie Macs of the world, and each deal that you do is a little bit different. It's going to fit into that box that may work for a credit union or a local bank, but it doesn't work for a large institutional lender. So knowing what your financing is going to be is a great way to also look into how much you can make from a potential investment when it comes to the multifamily space. Vince, do you have anything to add to that?
No, I think you're right, Christian. How much you make on a deal also in real estate, it's an illiquid asset, right? So if I think that one deal is up $1 million from when we purchased it, I mean, it's a little bit of an opinion. Until you go to sell, I guess you don't realize the gain or the loss. But the returns, the returns are important. It's important to know what your monthly return is going to be on the asset, as long as it's properly managed, and as long as you did your due diligence. Having that monthly cash flow is very powerful. Also, another thing that we haven't really talked about, another real huge asset or huge benefit of investing in multifamily assets is, the power of depreciation. And, you can take, the IRS will allow the entity and all of its the investors in the LLC, the members in the LLC, to have depreciation flow through. So if you do have passive gains on other investments, you can offset some of your income with depreciation. And the biggest way we do it is, after we close on a multifamily asset, is we employ a company to conduct a cost segregation study, which is basically a lengthy study of all the fixtures, furniture, equipment, anything that goes along with the building. Everything gets valued and everything is on a depreciation schedule. And there's a lot of bonus depreciation and other things that make the investment from a tax perspective very, very advantageous. And again, it's something you need to check with your CPA or tax preparer. But it's no secret that that's been a big driver for people to want to invest in income producing real estate.
Definitely, definitely. We've got about 5 minutes left here. If you have any other questions at all, feel free to put them in the chat. And as far as the next steps go, if you guys wouldn't mind, just leave a review in the meetup. It helps the group grow. Take action. That's the biggest thing right out of any of these meetups. Make sure that you're looking for potential investments, even if you don't think you can close. I'm happy to discuss them with you and come up with ways that make sense. If you need any legal advice or there's any questions that you have that pertain to the law, Vince Renda is a fantastic resource for that. And again, I'll share his information here at the end. You can always feel free to email me directly if you've got any direct questions at all. But I appreciate everyone for being on the meetup. Hope you got a lot out of it. And again, if there's anything that you need, feel free to let us know. Vince, you want to wrap up?
No, thank you for having me. Thank you for your good questions. And, like Christian said, my contact information is there. If you think I can be a value add or I can provide any input on something, feel free to reach out by call my office or email me. I'm very responsive. I'm a busy guy, but I get to my stuff and I'll be as responsive as I can. And if it's an area of law or it's something that I don't know the answer to, and I'm certainly a resource to point you in the right direction for the next step. So thank you for having me today, and hope to hear from any or all of you very soon. Take care.
Perfect. Thank you guys again for showing up. Have an amazing rest of your week and good luck with your real estate investments out there.